everyone, and welcome back. My name is Greg Furman, and this is the Forex Weekly Outlook for the week of January the 8th, 2018. Now, to get started this week, we're going to begin where we always do with the US dollar index. Now, we're coming off the non-farm payroll number on Friday. Arguably a decent report, not great, but not horrible either. So I don't think it's going to have a majorly negative effect on the US dollar. If anything, it should have a little bit of a positive effect. So right now we can see that we've got heavy support on the dollar index coming in at 91.50. Our medium-term trend is weakening against our longer-term trend, and our neural index is turning higher from an oversold condition, suggesting the dollar index is going to rally. Now, if we apply that to the Euro-US currency pair, we can see that we've had a big move off the VantagePoint 18-day predicted moving average, down currently at the 119.21 area. But once again, we can see our medium and long-term predicted differences, our neural index, all of which are starting to point lower, with a major resistance zone forming at 121. Now, if the euro has any chance of moving forward here, guys, to the upside towards 123, 124, we're going to need a sustained break of 121, and we can see we've basically got a triple, almost a quadruple top here in place. So 121 is the line in the sand here that basically everybody is going to be watching, but the medium and longer term indicators from VantagePoint are saying that basically this could be about it. So if Euro-US does move lower, then obviously US Swiss franc is going to turn higher. Same or very similar signal here, the medium term crossing the long term predicted difference. And again, we're looking at an oversold condition, suggesting we're going to bounce at least back up to the 98.06 area. Now, as we look at the British pound US dollar, again, I've talked about these resistance zones between 135.50 and 136.50, and that area continues basically to hold. So if we draw a straight line across here, we can look at our medium term crossing our long term predicted difference, but not a perfect setup for shorts here just yet, guys, as our neural index turns higher. The one thing I will point out, though, is we have a heavily overbought condition, suggesting that we should potentially see a retracement at least back down to the 134.50 area, that key VantagePoint 18-day predicted moving average. Now, as we look at our dollar-yen pair, same thing again. The one thing I'll point out that I thought that was rather comical on the dollar-yen pair prior to the non-farm payroll release is that it moved 60 pips between just after 8 a.m. Eastern Standard Time, suggesting that somebody knew that information about the payroll number prior to it being released, and they also viewed it as positive for the US dollar. We can see our neural index, our predicted short, our predicted medium and long-term differences starting to turn higher. Predicted MACD holding on the zero line, and we've got a 65.3 in the dollar yen. So our key support now is still holding down around this 112 area. Watch that area very closely. Now, with the US Canadian pair, I believe the medium term crossing the long term predicted difference is accurate here. However, there was another very strong unemployment report coming out of Canada. Now, what we have to remember here, guys, is that US and Canada, the biggest trading partner Canada has is the US. So as the US recovers, Canada recovers. But with this new tax law, corporate tax cut of the US, I believe that's going to cause this to do a complete 360 as we start to progress into 2018. Now, these numbers may prompt a rate hike from the Bank of Canada, but again, in my respectful opinion, it's a mistake, because what's going to likely happen is most of these corporations and companies are going to repatriate and move back to the US under that corporate tax rate. Now, the one thing I always say is that capital money is mobile. People are not. So capital will move very quickly back to the US, which I feel will ultimately weaken the Canadian dollar. When we look at Aussie US and New Zealand US for next week, guys, we can see that we're pretty heavily overbought here, and these two pairs will move lower when gold moves lower. What I would also suggest here too, for a more detailed analysis, that everybody take a look at the live training room that's now being offered through Market Technologies, where we really do a deep dive on a lot of these currencies. And again, New Zealand US, guys, basically the same deal here. As soon as that neural index turns down, gold starts moving lower. Aussie US and New Zealand US are both likely to fall. So once again, I'll remind everybody here for a more detailed look at this, to have a look at the live training room through Market Technologies, because it certainly is, we do look a lot closer and dive a lot deeper into these particular pairs. So with that said, this is the Forex Weekly Outlook for the week of January the 8th, 2018.